All right. In the interest of time, we are going to go ahead and get started. Just a few housekeeping notes before we do. This workshop is being recorded, and any informational materials will be made available to all registrants and attendees following today's session. If you do have questions throughout the presentation, we encourage you to put those in the Q&A. However, I would say we're going to be pausing periodically throughout today's webinar and answering some questions out loud. So I would encourage you to sort of hold off and make sure you're listening to the content that we're presenting, because a lot of times we'll be able to answer some of the questions that you're asking in the presentation itself. And then we'll make sure to answer as many questions as we can throughout the presentation. And then last but not least, if you need to enable closed captioning or live transcription during this webinar, I'm going to be posting a link in the chat right now with instructions on how to enable this feature on Zoom. All right, so hope everyone can see that in the chat as well. So my name is Lindsay Clark. I am Chief Borrower Advocate here at Savi, and I'm really excited to talk to you all today about some of the new things that have been going on in the world of student loans, including a new type of repayment plan, as well as payments restarting this fall. Before I go any further, though, I just want to briefly introduce or reintroduce some of you to who we are here at Savi. So Savi is a social impact technology startup based in Washington, D.C. We were founded by student loan experts and advocates who had been fighting on behalf of the borrower for almost a decade. And in 2017, this was the first year that borrowers could start applying for a program called Public Service Loan Forgiveness. And over 100,000 borrowers applied and 99% were rejected for a number of reasons. But all to say that our founders saw this and decided to do something about it. So they developed Savi as a technology platform and a service to help borrowers like you and like myself. I am a student loan borrower. I have a little over $200,000 in student loan debt. So if that makes any of you out there feel better about your own situations, then mission accomplished right off the bat. But to help borrowers like ourselves not only better understand our student loan debt, but actually navigate successfully from start to finish around some of these really complicated and overwhelming programs, like a public service loan forgiveness. But along the way, our goal is to make the experience of being a borrower a better one. And we really try to do that by unlocking as much additional savings as we can through things like income-driven repayment plans. We are a registered public benefit corporation, which means it exists in our mission and charter to serve the public benefit. And that's exactly why we do things like this here today. We host educational workshops and webinars almost on a daily basis for our various communities of borrowers across the country, because we firmly believe that when borrowers are better educated and more informed about their student debt, they are ultimately more empowered as consumers. So what does that actually mean? What is Savi for a borrower who's trying to use this tool and technology? So Savi really simplifies and digitizes, that was a tough one, the eligibility and application process around federal repayment and forgiveness programs. So our goal is to show you your best options, help you to submit the complicated paperwork needed to enroll in these programs, and then monitor that with you to ensure you actually reach the finish line. Just to clarify, we are not a student loan servicer. So we don't replace the role of that servicer, whether it be Mohila, Nelnet, Advantage, whatever servicer you might have. You can kind of think of us as an intermediary or an advocate on your behalf. So we're going to work with you to make sure that you're enrolled in the best option, your servicer is telling you the things that it needs to, and that ultimately, like I said, you cross that finish line. Savi users on average are able to reduce their monthly payment by about $150 a month and receive forgiveness around $20,000 in total. And so far, we've helped our users find over $1 billion in projected loan forgiveness to date. So again, I'm going to show you a little bit later on in this presentation how you can complete one simple sort of application through Savi to see all of your best options and then enroll in the necessary programs from there. Okay, so a quick look at the agenda we're going to cover over the next hour. First, we're going to talk about this new income-driven repayment plan that was just announced over the last few weeks called the SAVE plan. This is something that I know is going to be beneficial to most of you on this webinar as far as helping to reduce your monthly payments. Then we're going to talk about the resumption of payments. Payments have been on pause for over 3 years and are going to resume this fall. So how you can prepare, what you need to know about this happening. We're then going to talk about a few other major policy and program updates that might be relevant and important to be aware of. And then the last part of the presentation is really going to focus on how to get started with Savi, how you can enroll in this new income-driven repayment plan through your Savi account, and how we can help you to apply for other forgiveness programs. All right, so with that being said, we are going to dive right into the SAVE plan. So this stands for Saving on a Valuable Education, and it is the newest and latest income-driven repayment plan to be announced. So what is the SAVE plan? So the SAVE plan is a new type of income-driven repayment plan offered by the Department of Education. And it is supposed to be the most affordable plan yet. And it will set your payments based on your income and your family size and your tax filing status. Now, this new SAVE plan is going to replace the existing repay plan. Okay, so for any borrowers that might have been enrolled in that repay income-driven repayment plan, let's say before the payment pause went into effect, you will automatically be moved onto this SAVE plan and have your payments recalculated accordingly. All right. Now, this new SAVE plan will be available to any borrowers with direct loans. Okay. However, it will not be available to borrowers with Parent Plus loans. Parent Plus loan borrowers are only able to access one type of income-driven repayment plan after they have consolidated, and that plan is called the ICR, or Income Contingent Repayment Plan. Okay, so for those with Parent Plus loans, the SAVE plan is not going to be an option. However, it's important to note that this plan will be PSLF eligible, just like all the other income-driven repayment plans. Okay, so it should help any borrower who is pursuing public service loan forgiveness to receive even more in forgiveness. All right, when will this SAVE plan be available? So borrowers are actually eligible, or eligible borrowers, I should say, are able to enroll and receive the following benefits right now. So if you were to enroll in this plan, when payments resume this fall, any unpaid interest will be covered so that your loan balance won't increase as a result of capitalized interest. This new plan will also raise the amount of income considered non-discretionary, so that no borrower making under 225% of the poverty level, so equivalent to about $15 an hour or around $30,000 a year, will have a student loan payment. So your student loan payment would be equivalent to $0 a month. And it's sort of a sliding scale upwards from there if your income is increasing. So that's sort of what's going to be made available right now. Then next summer, further improvements to this plan will be implemented. So that includes the following. This new plan will then drop the percentage of discretionary income for undergraduate loans from 10% to 5%, and will remain at 10% for graduate loans. So what this will mean is you'll see savings right now on this plan, and then next year you will see even more additional savings if you have undergraduate loans. Borrowers with a mix of undergraduate and graduate loans will have a weighted amount based on those loan types. So it'll be something between 5 to 10%. And then last but not least, borrowers with loan balances under $12,000, okay, will receive forgiveness after 10 years instead of 20 years. Now, this is not public service loan forgiveness. This is income-driven repayment forgiveness. So essentially, if you had a starting original balance under $12,000, you will now be eligible for forgiveness after 10 years instead of having to wait till the 20. But again, that won't be eligible to go into effect until next year. Okay. But again, this plan is available now and borrowers are able to enroll. So you're going to see sort of two waves of savings. First, this savings because they are basically raising the amount of income considered non-discretionary. So that should lower monthly payments across the board. And then next year, they're going to push that percentage of discretionary income further down for undergrad loans. So you should see even more additional savings. And for anyone, again, who had an original principal balance under $12,000, you're going to see forgiveness after 10 years instead of 20 years. Right? So just to give you an idea of, what this savings could look like in real life. So here's an example. Sam is a nurse at her local nonprofit hospital. She makes about $77,000 per year and would save by enrolling in this SAVE plan. And she would save about $234 per month. So on the existing or original repay plan, she was paying $295 a month. On this new SAVE plan, her monthly payment would come down to $61 a month, right? And now keep in mind here too, for any child dependents that you have on an income-driven repayment plan, that's going to lower your monthly payment by about $50 per child, all right? So again, this could be significant savings, especially for borrowers who are, a little bit nervous or a lot nervous about going back into repayment this fall. So how do you enroll in this new SAVE plan? Well, we are going to show you in just a little bit how you can do this very easily through Savi. You can go through, enter in your income, your family size information, your employment information, and we are able to show you and enroll you right now on this repayment plan. And then come October of this year, when payments resume, you will be able to transition into that lower monthly payment very easily. All right, so we're going to take a quick pulse check and see if there are any questions that I can answer out loud about this SAVE plan before we talk more about payments resuming in the next couple minutes or so.
Hi, Lindsay.
Oh,
One
hey,
of
Joe.
the questions we have gotten is, what if I just applied for the repay program this week? How will that affect me?
Yep, great question. So you will actually be automatically transitioned onto the SAVE plan. So if you just applied for repay, you won't need to do anything more. In fact, you'll probably just see a lower monthly payment, but that will happen automatically. They will automatically put you onto that SAVE plan.
Great. And another question was, what if I have Parent Plus loans? Can I take advantage of SAVE?
So unfortunately, with Parent Plus loans, they are not eligible for this SAVE plan. Parent Plus loans are only eligible for one type of income-driven repayment plan, and that is the Income Contingent Repayment Plan, or ICR. And you first need to consolidate that Parent Plus loan to even make it eligible for that ICR plan. So Parent Plus loans are not going to be eligible for this SAVE plan. However, they are eligible after consolidation for Income Contingent Repayment, or ICR. I saw another question that came through. Someone asked, will the SAVE plan take my spouse's income into consideration? And really, it comes down to your tax filing status. So if you are married filing jointly, it will look at your joint income. If you are married filing separately, it will look just at your income alone. So it's not just about your marital status, but it's also about your tax filing status that really matters here. Someone else asked, so even if we never made any payments, can we still sign up for this plan? Yes, as long as you have an eligible loan type, you are able to register and sign up for this plan. Is someone who has zero income eligible? Absolutely. If you have zero income, you are going to be able to qualify for a $0 monthly payment. So you are absolutely eligible to apply. On the other end of the spectrum, someone asked, what if your income is higher than $77,000? Absolutely, you can qualify. There's no income cap here. So we just sort of use that as an example. Your income can be $500,000 a year. It doesn't matter. Yeah, as long as you have eligible loan types, you'll be able to qualify for this program. All right. Now, the SAVE plan might not be cheaper for everyone. When it comes down to income-driven repayment plans, these are plans that base your monthly payment not on your debt amount, but on your income, okay? So if you don't have a very high debt to income ratio, right, meaning you have a lot less student loan debt than your income, you might actually have a lower payment on one of the standard plans. And those standard plans base your monthly payment on your debt amount. So this is exactly why the Savi tool is so valuable, because you can enter in your information and you're going to be able to see what your best options are. For some borrowers, again, who might have $10,000 or less in student loan debt, being on a standard plan might be a more affordable option, especially if your income, I would say, is 70,000 or above. So again, it's a really good time right now to look into what your best options are going to be. All right, someone also asked, I'm 16 years into the ICR plan and was told that I would automatically be put into SAVE. Would that recalculate starting now, or would my 16 years still count? So your 16 years should still count, even if you are transferring to a new or different IDR plan. And the SAVE plan is a type of IDR. Now, right now, based on guidance from the Department of Education, only borrowers who are in repay will be transitioned into SAVE. So my advice to you would be you might need to submit another application if you would like to be into the SAVE plan. Otherwise, we have not been told that borrowers in other or different IDR plans will be transitioned, just those in the repay plan. All right. I'm going to look for one more question here. The 77, someone asked about the 77,000 in the example. Yes, that is sort of the adjusted gross income, or AGI. So these income-driven repayment plans look at your taxable income and usually your adjusted gross income that can be found on your tax returns. All right, we're going to keep chugging along here, but I promise we are going to get to more questions as we continue. Okay, so let's talk about federal student loan payments resuming this fall. I know this is a big deal because, again, payments have been on pause since March of 2020, when the CARES Act went into effect and pandemic relief went into effect. So to reiterate, interest will resume starting on September 1st of this year, and payments and bills will be due starting in October. Now, everyone will have a different due date. So we're going to talk about some steps to make sure you know and are aware of what exactly that due date might be. So let's recap here. Payments resuming starting this fall. Why are they resuming? Well, the recent debt ceiling bill basically codified the end of the COVID-19 payment pause that, again, had been in effect since March of 2020. So after nearly 3+ years on pause, payments and interest will finally resume this fall. So again, interest will resume starting on September 1st, and payments will be due starting in October of this year, 2023. Now, your student loan servicer should be notifying you of your payment due date, but I highly encourage you to check your student loan servicer account and website to see what that might be. And the Department of Education is looking at ways to ease borrowers back into repayment, and will also be notifying all borrowers well before payments restart. Speaking of ways in which they are looking to ease borrowers back into repayment, they have instituted the on-ramp to repayment. So this is an attempt to help borrowers return to repayment by creating a sort of 12-month on-ramp to repayment that will last from October 1st of this year to September 30th of next year. And basically, this is what it does. Borrowers who are late with their payment, miss their payment, or only make partial payments during that period of time won't be reported as delinquent or in default, all right, only for this certain period of time. Interest will, of course, continue to accrue. But again, if you miss your payment, are late, or only make a partial payment, you won't be reported to your credit agency as delinquent or in default. So again, payments are still due, and you should still make your payment if you can, especially if you're pursuing public service loan forgiveness, because again, months where you don't make a payment are not going to count towards public service loan forgiveness or IDR forgiveness, okay? So if something happens and you can't make your payment, you won't be penalized for it, but it ultimately is in your interest to make that payment if you can. But it's good to know that this is, in place just in case. All right, so how should you prepare for payments to resume? First and foremost, you want to make sure your contact information is up to date at studentaid.gov. So your servicer can reach out to you with important updates, right? So that's studentaid.gov. That is the official website of the Department of Education. Also on that website, you want to confirm who your loan servicer is. Over the last 3 years, about 17 million borrowers had their loan servicers switched because a lot of servicers ended up ending their federal contracts for a variety of reasons. And so many borrowers who before the payment pause might have had one servicer will go back into repayment with a completely different servicer. So it is worth checking and making sure that you know exactly what servicer you have. That way you can make sure that your account is set up and your contact information is updated. Now, once you've confirmed your servicer and you have access to your servicer account, you want to check what repayment plan you were on, at the payment amount, and your due date. All right, just making sure they have everything noted there. And then you can use Savi's personalized repayment calculator to help you enroll in the best type of repayment plan to hopefully help lower that monthly payment. We can also help prepare and submit any applications around public service loan forgiveness or teacher loan forgiveness. Okay, so we're going to take another pulse check here and see if there are questions related to the on-ramp, the payment pause, or payments resuming. One I just saw pop up right here. Do you have to apply for the on-ramp program, or is that automatic? So you don't have to apply. It's basically just a safety net in place so that if you do miss your payment, you can know that it won't be reported to the credit bureaus. But again, we encourage you to try to make that payment if you can. But it's not a sort of a separate plan that you need to sign up for. It's just something in place, sort of a policy in place that late, missed, delinquent payments, et cetera, will not be reported to the credit bureaus.
Hey, Lindsay, we've got a question that says, what if I'm currently in default? What can those borrowers do to take advantage of these programs?
Yeah, that is a great question. So over the last year, the Biden administration actually announced a new program called Fresh Start. And this program is an attempt to bring any borrower that was in default back into good standing. So this program is really easy to sort of opt into or enroll in. And normally when you're in default, or in the past, it's taken about 9 months of going through a rehabilitation program to bring your loans back into good standing. But under this Fresh Start program, all it takes is a phone call, and you can reach out to the collections agency that owns your loans right now. And basically by calling and saying, I want to opt into the Fresh Start program, they will enroll you. It takes about a month, and then your loans are put back into good standing. And then your loans become eligible for all of the options that we've talked about here today. Enrolling in this new SAVE plan, being eligible for public service loan forgiveness. So again, if you need any assistance with that, our Savi team is happy to help. But this program is called Fresh Start. And it is a really powerful way for anyone in default to bring their loans back into good standing. All right, let's see. Is there a way for the percentage to be lower in an income contingent repayment, or ICR? Currently, it's 20% of discretionary income. That payment is way too high. Kelly, I hear you. There's no way to lower that. I mean, if you are only eligible for that plan because of Parent Plus loans, unfortunately, that is the only income-driven repayment plan. And there's no way to lower that. If you do have any child dependents, again, that takes those into consideration. However, the other types of income-driven repayment plans will be at 10. And then again, on this new SAVE plan, it will eventually be lowered to 5% for undergraduate loans.
Hey, Lindsay, another great question some people have asked several times is, how can I see what plan I'm currently on? I know I'm on an IDR, but I don't know which plan I'm on. Is there somewhere they can go to check that?
Yeah, this is a great question. And I was actually doing this for my own loans earlier today. So it should tell you that on your servicer website. So if you log into, Nelnet, Mohila, whatever your servicer might be, it should show you that there. If not, it also might show you that information if you log into your federal student aid ID account on studentaid.gov. And I will put that in the chat again here, studentaid.gov. That is the Department of Education's official website that has record of any federal student loan debt that you might have ever taken out. So that is a place too where you can access some of that information. All right.
Someone asks is, what if my spouse has loans of their own? Will that be taken into account, and how does that work when repaying on an IDR?
Yeah, it absolutely is taken into account. And in fact, it can actually help to lower both of your monthly payments. So I'm going to show you in a little bit here how when we go through the Savi tool, we're actually going to ask if your spouse has student loans. And what they do is they will basically factor in both of those balances and help put both of you on a repayment plan. It's not like you are responsible for the other person's debt, but it actually factors in addition to your income, to help lower that monthly payment. So that is something, if you and your spouse both have student loan debt, that is something that you definitely want to consider when enrolling in these income-driven repayment plans. All right. Someone asked, if I apply for the new program, the payment is higher than my current income-driven repayment plan. Can I stay with my current program? Yes, you can. So this is why it's a good idea to look at your options, right? And see what you might be eligible for on other plans versus this new plan. And this person also asked, my income has increased due to one-time teacher bonuses. Are the bonuses counted as income? So this is a great question. So when you are applying for an income-driven repayment plan, you must submit supporting documentation attesting to your income. Now, most people don't know this, that it can either come in the form of your most recent tax return or a pay stub from the past 90 days. So obviously a tax return, right, would include those bonuses, but a pay stub from the past 90 days might not. And especially for anyone who might be hourly or whose salary fluctuates from month to month, I encourage you to use a pay stub instead, because what they will do is they will take that pay stub amount and basically extrapolate it over 12 months as if that was your salary. And so it can help actually lower that monthly payment, right, by looking at a lower sort of quote unquote salary. So all of that is fair game and something that, anyone who, again, has fluctuations in salary might want to consider instead of their tax return. All right. So I see a lot of questions about consolidation coming through as well. Consolidation is a tricky topic, and really, no two borrowers are the same when it comes to a consolidation situation. So here's what I would recommend. When going through the Savi tool, Savi is going to help you identify if it is necessary for you to consolidate based on, your loan type or trying to enter into a certain program, and we will flag that for you. So there are certain loan types, right, like a Parent Plus loan, where, you need to consolidate that loan in order to be eligible for any type of income-driven repayment plan, okay? Or there are the older types of loans, FEL loans, FFEL or FFELP, right? Where, again, need to be consolidated in order to be eligible for programs like public service loan forgiveness, okay? So the tool will help you to identify where there are scenarios where you need to consolidate. Sometimes you don't necessarily need to consolidate. You could have 6 different direct loans, and it might not be in your interest to consolidate them all together just out of convenience. So the tool will help you identify when this is a scenario where you absolutely need to. But if you have additional questions outside of that, I would highly encourage you to reach out to our Savi team to make sure that if you are pursuing or interested in consolidation, that is something that's going to be in your best interest. All right. Last question I'll take here, and then we're going to talk about how the Savi tool can help you to see these options under the new SAVE plan and actually enroll. So I just want to clarify the difference between, forgiveness of balances after 10 years on this SAVE plan and public service loan forgiveness. So public service loan forgiveness is a forgiveness program. SAVE is a repayment plan. Okay, so you would repay your loans on the SAVE plan, and you could still be working towards public service loan forgiveness. Now, with this new SAVE plan, the forgiveness after 10 years is only for people who had an original starting balance of $12,000 or less total on their loans. Okay, basically what it's saying is that that person shouldn't have to be paying for 20 years. We're going to forgive their loans after 10 years. Okay. Public service loan forgiveness, on the other hand, is also forgiveness after 10 years worth of payments. Okay. But it is forgiveness of the entirety of the loan balance. Doesn't matter what your starting principal balance was. So there's no limit of being $12,000 or less. Okay. So hopefully that cleared up some confusion. All right. So I think we're going to keep chugging along here. And I will make sure to take as many other questions as I can at the end of the presentation. So we want to transition a little bit and talk to you about how Savi is able to assist you with all this. I know that this is a lot of information. It's overwhelming. Many people, myself included, have not been paying as close attention to their student loans because they've been on pause. It's been nice, admittedly. But now, we all really need to start thinking about what this means. And there's been a lot of changes in these programs. So with Savi, when we go through, we're going to ask you some basic questions. And through that, we're going to be able to show you, your own personalized options around both repayment as well as forgiveness through programs like public service loan forgiveness or teacher loan forgiveness. You're also able to receive updates on these improvements, the debt relief, a lot of these program changes and more. We host these webinars on a regular basis, but we also email all of our Savi users whenever anything big happens, because we know it's hard to sort of get trusted and true information. And then through Savi, you are able to enlist our help and really have us take on the burden of not only navigating through these programs, but all of the enrollment and application required. And there are 13-page plus applications required for each of these programs. And so we take that all on for you if you should choose to enlist our help. And we submit those for you on your behalf, and then we monitor them with you to ensure they achieve the desired outcome. I know so many borrowers who I've talked to who have submitted applications and then it's been radio silence. They haven't heard anything from their servicer. Or they are rejected wrongly, and then never end up getting to that finish line. And so that's exactly why Savi is here. And then last but not least, through Savi, you are able to receive personalized support from our student loan experts. I know how important it is for so many people and so many borrowers, myself included, to be able to talk to someone, whether via email or on the phone, about their situation and really just be able to understand, what's going on and what their best next steps are going to be. And that's exactly what Savi provides through our essential membership. So with that being said, a couple ways to get started here. You can scan this QR code on the right-hand side with your phone camera, or sign up using the link below, and we'll post that in the chat as well. Or if you are not able to sign up now, you should receive an email afterwards that is directing you to your Savi account. All right, so I'll give you just a second on the screen here in case you want to take a picture of that, but that will help direct you to your Savi account if you have not signed up already. Now, once you've logged into your Savi account, the first thing you're going to see is your Savi dashboard. This is sort of like mission control for everything Savi. It's where you're going to be able to do a lot of different things from that Savi account. First and foremost, you are able to invite your friends and family to benefit from Savi as well. So you can click on the left-hand side of your dashboard, enter in their email addresses. And in fact, if you enter in 3 or more email addresses, you'll actually be able to receive a 50% off discount code on that essential plan. And speaking of that essential plan, so there are really, 2 ways to use Savi. Everyone can create their account and utilize it for free. We're going to collect that information from you and be able to show you exactly what your eligibility looks like around repayment and forgiveness. Then it's up to you whether you want to take on that application process on your own or have Savi assist you with that. And so that's really where the essential plan comes into play. And for all of you on this webinar, across all of our communities of users and borrowers, the cost for that essential plan might vary depending upon the partner, employer, or membership association that you are accessing Savi through. So by logging into your own Savi account, you should be able to see what that cost looks like for you. It could be absolutely free if your employer is subsidizing that. At most, it would cost $60 a year, not a month, a year, to utilize that essential. And it is 100% money back guarantee. So we really want you to feel confident in utilizing our help and services to get on the right track. Now, again, the process is pretty simple. It's almost like a TurboTax for your student loans. We're going to ask you some simple questions around your family size, your tax filing information, your income. Again, this is all to help us understand what you might be eligible for as far as an income-driven repayment plan. And then your employment. This section is particularly important because it helps us to identify any potential forgiveness eligibility. So you are able to enter any current or previous employment you might have had. If you are unemployed or retired, you can skip this section entirely. But I encourage anyone who thinks that they might have been eligible or worked for a qualifying public service employer, you're able to actually search that employer through our employment section, select it, and add as many current and previous employers as you need to. So you can see this borrower has 3 previous employers they've added to their profile. And then the last step in this process is syncing your student loans. So we provide loan sync through a technology called Plaid. This is sort of a best-in-class syncing technology with the highest level of security. Basically, what it allows us to do is to, let's say you select your loan servicer. So in this case, maybe it's Navient, enter in your username and password credentials, and it's going to sync over a read-only snapshot of that data. So it's not giving us access or anything like that. It's just telling us the important things we need to know, like your loan type or your balance or your interest rate, things like that. That way we can refine our estimate around what exactly your payment and forgiveness would look like. And then after you've gone through that, you reach the final step here. And this is sort of where we show you what your plan options would be. So you can see what your new monthly payment might look like. So again, here's on the new save plan, all right? So we've added that into our tool, what that total payment over time would be, how long until repayment, you'd be done with your loans or achieve forgiveness. So basically the year and the month exactly, and what that total forgiveness would look like. Right. Now, you might see a couple of different types of plans available to you, so you can expand below for more options and see what is at your disposal. Now, it's at this point where you can say, okay, I'm going to enroll in these plans, going to do so on my own, or you can click continue and have Savi do that work for you. This is just sort of a little bit of what that looks like behind the scenes of that essential membership. So not only are we going to help you with any income-driven repayment application, but we are also going to help with any public service loan forgiveness, employment certification forms. With the click of a button, you'll be able to start these forms, have them sent to your employer HR for signature, and then we will submit them to the servicer on your behalf. So again, all of this can be done really with the click of a button, and it removes so much human error that can come into play with these applications. And then once those applications have been submitted, you are able to track their progress through your Savi dashboard. So as you can see on the left-hand side here, both forgiveness applications as well as your income-driven repayment application. And then on the right here, sort of a zoomed in look as to what that actually feels like. Most borrowers that I talk to, myself included, describe one of the biggest frustrations in working with their servicers being the lack of transparency. When they submit an application, they'll wait a month or more and have no idea what's going on. Or they'll submit an application and their servicer will come back and say, you're eligible for this payment. And you're thinking, that's a lot higher than I thought it was supposed to be, right? So we help to track every step along the way. We make sure that servicers are held accountable and are reviewing your applications in a timely manner, but that they're also giving you the credits you deserve and the payment amount you deserve. And you'll be able to sort of track each of those steps along the way through your Savi account. This really ensures that we are able to act as an advocate for you when we need to. So if there's an issue, we can help you to follow up with your servicer with and on your behalf, and ensures that you actually cross that finish line. And then last but not least, our incredible Savi support team. So whether you are a DIY or essential user, you can access our help center at any point in time. If you are an essential user, you can actually contact our support and send us a message through your Savi account. or you can give us a call if you need to. And I'm going to put that call on the screen in just a call number on the screen in just a second here. So again, you have a couple of different options as far as accessing the support you need throughout this process. All right, so to wrap things up here, what's next? So for any of those who have not created their Savi account and filled up that information, I highly encourage you to do so that you can see what your options are going to look like, especially under this new save plan. I encourage, some of you or many of you to upgrade to that essential if you feel it's necessary, because I think if there was any time, especially after 3+ years on pause, now would be it to sort of figure out, all right, where do I stand? There's so many programs that have changed and for the better. So we want to make sure that you are maximizing your opportunities here. And then complete those applications through Savi with the click of a button. Like I said, you can be all submitted and done with this process within the next hour or so and ready for what's to come in October. So you can scan that QR code to upgrade, or you can send us a message in your Savi account, or you can give us a call at the number that you see on your screen, weekdays from 9 a.m. to 5 p.m. And I'll read that out loud for anyone. It is 833-382-3175. Again, that is 833-382-3175. All right. So we've got some time left over to take some more questions. And I know we have a ton that have come through. So let's see. Job, is there anything that's popping out to you?
Let me take a quick look and find some to answer. We've gotten quite a few so far.
Yep, so a couple of people I see have already upgraded to Essential and wondering about any type of rebate or for the subscription. So again, it is 100% money back guarantee, meaning if you are not happy with the services we provide for you, we will give you a refund. And there's no auto renewal here, by the way. So you can choose from year to year whether or not you want to upgrade. And so we're not trying to, once you pay $60, you're not on the hook to pay that until your loan is paid. In fact, quite the opposite. It is totally up to you year to year, based on the assistance you feel you need. So you were able to cancel at any point in time, and there's no sort of auto renewal here. Someone already also asked, I'm already enrolled in public service loan forgiveness, but do you assist with consolidation of loans to take advantage of the one-time IDR adjustment? We absolutely do. And when you go through your Savi account, Stephanie, you'll be able to, there's going to sort of be a flag for you around consolidation that you'll see, and we will provide you with instructions and assistance around that process to make sure that you're on the right track to take advantage of that. Okay, for anyone having issues syncing Nelnet with Plaid, we've seen this a couple times. I would say this, in the next week or so, you will receive an email from us. We are updating our system to be able to support borrowers with Nelnet. Plaid used to support Nelnet and no longer does. And so I would say stay tuned. You're going to hear from us and you'll be able to come back and sync your loans. There is no Savi app on the phone, but it is 100% sort of mobile readable, I guess. It's an internet application and it's mobile compatible, so you can access the website on your mobile phone, but there is no actual app. That is hopefully on the roadmap in the next year. Okay, someone asked, we have a Parent Plus loan in my wife's name. If she passes away, does the loan or yourself become responsible? So, and this goes for anyone with student loan debt, regardless if it is a Parent Plus loan, but for anyone with a federal student loan, which includes Parent Plus loans, whomever the name of the loan is in. So if this happens to be your wife, if it happens to be you, if it's your own loan, when that person passes away, the federal loan is canceled. So it never gets transferred to someone else. Okay. So that goes, if these were your own loans in your name for your undergraduate and you happen to pass away, those loans would not go to any family member. They would go with you. I know it's a morbid topic, but important for people to be aware of. All right, let's see here.
Hey, Lindsay, one question
Yeah.
we've gotten a lot are, what options do retired borrowers have?
Yeah, so I would say this, if you are retired and are on perhaps a limited income at this point in time, you are definitely able to take advantage of income-driven repayment plans. When it comes to forgiveness programs, public service loan forgiveness, all right, unfortunately, once you are retired, you are not able to apply retroactively. So you would need to be still working. If you were a teacher in a Title I school and are currently retired, and you taught for 5 consecutive years or more, you could still apply for teacher loan forgiveness. And again, this is something when going through the Savi tool that we'd be able to identify for you. I would also say that if you are retired now and have been paying on your loans for years, if not decades, okay, they are coming out right now with something called the Income-Driven Repayment Account Adjustment. And basically what that is meant to do is for borrowers who have been paying for that long amount of time, they are going to be giving credit for periods of deferment, forbearance, and payment to basically get you closer to that 20 to 25 years and forgive your loans under income-driven repayment. So they've already started sending out some of these emails to borrowers who are eligible right now, but this is something that you might become eligible for in the next couple of years and should be automatic. So I would say the best bet right now is to look at your options under an income-driven repayment plan. And then Savi could help to see where you might fall on sort of that 20 to 25 year horizon and how close you might be to having those loans forgiven. All right, for those asking, how do we figure out if our employer is still paying for the Savi Essential membership? And you haven't been able to get an answer yet. I would say, maybe give us your email in the Q&A. I saw a couple of questions with around this, but if you go to your Savi dashboard, and on the left-hand side, it should say Savi, your Savi plan. And if you click that, it should show you whether or not that is still being subsidized by your employer. Sometimes you might need to verify your employer email address, and then you will have access to the Savi Essential service at no charge. All right, so I would say I saw someone say, since this program is not available for Parent Plus loans, what help do we have as a Parent Plus loan borrower? I would say this: Parent Plus loans are eligible or can become eligible for public service loan forgiveness. So this goes out to Greg or anyone else. If you've been working for a qualifying public service employer, which you can verify through Savi, we would need to consolidate that Parent Plus loan, but then you would be able to get retroactive credits and qualify. The only thing that Parent Plus loans are not eligible for at this time is this new SAVE plan. Now, I will tell you this: we have been fierce proponents of trying to make Parent Plus loans eligible for more programs. I completely agree with you here, Greg. Many people think that the student debt crisis is a young person's problem or a millennial issue, when in fact, the fastest growing demographic of student loan borrowers is actually 50 plus, and it is parents taking out loans for their kids. So this is a real issue, and we are pushing, on the Department of Education and the administration to do more to help those borrowers. And I will say that they have been listening. We've seen improvements there. So please feel free to reach out to us, if you have more questions about what you might be eligible for. But that would be my best bet right now, especially if you've been working for a qualifying public service loan forgiveness employer. So yes, someone asked, since I might be in default, can I recommend my spouse to obtain this help with Savi and enrolling in Save? Yes, absolutely. But also we can help you by getting to get out of default. Just as a reminder, there is this program called Fresh Start, which by getting on the phone and opting in with the collections agency that currently owns your student loans, you are able to enroll. It takes about a month tops for this to sort of go through and for your loans to be put back into good standing. All right. So again, a lot of people asking about recommendations with consolidation. I would say, again, the best bet is to go through the Savi tool, sync your student loans. We're going to be able to detect what type of loans you have, the different perhaps interest rates, because when you consolidate through the federal consolidation process, if you have multiple loans, your interest rate becomes a weighted average of those loans. And so, there could be scenarios where, you might not need to consolidate. I've seen a lot of people who consolidate out of convenience, not because of their loan type or something like that. And so that's an important thing to consider. And that's something we will be able to help you sort of understand. All right, so someone asked, I already see myself enrolled in the SAVE plan, but the amount of my repayment is the same. Is there a period that the servicer will recalculate my payments so that when I begin to repay, I will see a lower amount? So yeah, so this SAVE plan is kind of going to go into effect in sort of phases. So, you're able to enroll now, but it's going to be, similar to what the repay plan was, except you should see some slight savings, but you will see even more savings, especially if you have undergraduate loans, next year. So I think that they're going to sort of be two waves. But again, Stephanie, we're happy to have our support team take a look at this. And for anyone else out there, who might be curious about what they're seeing on their servicer page versus what, we're showing you on the Savi site. I know that there's going to be a lot of questions. So again, this is why I think, that the essential plan, if there was ever a time, right? I'm not trying to be a salesperson here, but if there was ever a time to sort of have that conversation, just get yourself set up, one-time thing, now is the time. So again, this is another question. My service loan provider is saying my monthly payment should be 2.5 times what Savi's telling me my loan should be, right? And so what they're probably using is they might be putting you on the standard plan. You might not have ever been on an income-driven repayment plan. So the Savi estimate is usually going to be the more accurate because your servicer is using information that is outdated. It could be putting you on the plan that you were before the payment pause went into effect, which was over 3 years ago. So again, this is the time to sort of reevaluate what that payment amount might be. If you were already a Savi member and you're curious, how you find out what your payment plan was prior to the pause, I would log on to your servicer account and they should show you, or you should be able to see past payment amounts and what plan you were previously on, especially if you didn't create a Savi account until during or in the midst of the pause, and that's where you should be able to see it. All right. Job, any other questions you're seeing come through on your end?
I'm trying to find some good ones. That I'm seeing a lot of repeat questions that we have answered. Let me try to find some new ones, but I want to reassure everyone, if you do have a question that we didn't get to, we would really recommend starting your Savi application, entering in your information to see what you qualify for, because there's a good chance your question could be answered simply by starting that application. But if you do still have a question, you can click contact support to be connected with some resources to get those answered as soon as possible.
Yep. So for some people who might have already been on an income-driven repayment plan, just one thing to keep in mind, if you were, it's going to put you back onto the plan you might have been before the payment pause, which was 3+ years ago. You're thinking about, your income in March of 2020 versus maybe what you're putting your income in now, maybe if that's increased. That might be a reason why you're seeing a higher estimate. If that's the case, stay on the plan that you were on before then. But in a year from now, you will have to recertify and use your more updated income. So that is, again, keep in mind, your servicer might be looking at older income data, and that could be factoring into the calculation or estimate that you are seeing. And for anyone, again, who has been trying to apply for public service loan forgiveness, but got a rejection or told they're not eligible, we've been seeing wrongly rejected applications left and right. I would say almost about 50% of the time. Please reach out to us here at Savi, because we will make sure to follow up with Mohila and make sure that you get the forgiveness that you deserve. But that is something we've been seeing more and more often, especially in the last year. So you're not alone in that happening to you. All right. I know we are running up on time here. So before we wrap things up, just wanted to talk about one last thing here. If anyone is interested in potentially continuing their education at some point, we wanted to just mention that Savi has started an exciting new partnership with Western Governors University, which is sort of a nonprofit online university that gives borrowers flexible and affordable degree options. There's no application required. You just need to submit the interest form that we're going to put in the chat, and we'll be able to send you more information. So I'll pop that in the chat here. But we know that student debt has prevented a lot of people from continuing their education. So that's why we're excited about this partnership, because in helping people to get forgiveness, we're hoping that it will open up the doors that they've been wanting to open around continuing that education. So I will pop that link in the chat right now for anyone interested. It is just a quick form, and we will reach out to you with more information. All right, that link is now in the chat. Otherwise, I know we didn't get to everyone's questions. Again, please feel free to reach out to the support number on your screen here. That is 833-382-3175. Or you can send us a message through your Savi account. I will say we're going to be hosting many, many more of these and some office hours as we approach payments resuming. So we appreciate everyone for attending. We hope this was helpful. Appreciate any and all feedback. And we look forward to helping you in the near future. Thanks so much, everyone, and hope you have a great rest of the day.